Welcome back, everyone, for another week of thrills in the market. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 21st of May, 2018. Believe it or not, one more week for this month to end, basically a week. Reminder to everybody that next Monday is Memorial Day in the United States. It's a holiday, so as we approach the end of the week, we're likely to see things die out a little bit. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking bullish. The market's clearly allocating to risk. We have the Dow leading the pack, 208 points, 209 points, up 0.85%. The NASDAQ up 51.25 points, up 0.75. The European markets are also up. The Euro Stoxx is up 22 ticks, or 22 points really, 0.62. The laggard, Japanese yen, British pound, gold, 10-year note, U.S. Treasury bond, and euro. Those are your safety items. Gold getting pounded a little bit over the last couple weeks. Some interesting macro reasons for that. DAX, curiously, only up 16.5 points, which is basically one rotation in that product, up 0.13%. So the ES is opening with a gap up. We have gaps up versus the Friday close across the board in the indices. And that's what we're heading into. So risk on today, and we'll go over the details here in a minute. As far as what we're looking for today, in terms of releases and so forth, the calendar's really clear and clean. It's Whit Monday for the German and Swiss cash and equity markets. That's why the DAX. It's a public holiday in Austria, Belgium, France, Netherlands, and Norway. We have several Fed speakers today, but other than that, there really isn't much else to discuss in terms of interruptions or releases. So with that, let's move on to what we expected on Friday. Friday's expectations. A lot of doodling on this image here, but we're going over the narrative and the key theme, the key objective for Friday was the break of this double bottom sometime during the session. So the expectation was to push up towards the prior point of control, which is 27.1975 or so. Yeah, 27.1975. Close that, rotate down, take out the low, and then just go sideways. That's the primary scenario. Here's what actually happened. We opened up, opening swing high, opening swing low, and could not quite get to, I guess it's 27.20. Couldn't quite get to the point of control as drawn. We ended up pushing up to 1950 before we took out the double bottom of 27.11, and instead of holding sideways down here, we held sideways at the bottom end of the range of Thursday. So scenario one, except a lot lazier, and a day like Friday, man, you have to switch to a two-tick Renko to see what's going on in there. So few bars. If I was to keep this, there's such little action, and this is my point. There's such little action that if I kept the bar sizes to what I normally have them on, like this, the whole day occupies about, if I shift this over, a little over a quarter of the screen. And it's pretty Pretty sad, really. There's not much in terms of movement and opportunity on Friday. Outside in trade, basically. And the goal for Friday is to catch the failure of the point of control and then the break of 27.11, and that's all she wrote. So pretty interesting that it's just come to a grind. This morning we're trading up here at 27.75, which is a stock zone. Looking at the overnight session now, what's curious about Friday? Friday, we had a one-tick failed auction right up here, okay, after we took out the IB low. So Friday was neutral, finishing in the middle. The profile on Friday is a nice, probably 8.5 month pregnant belly. It's skewed to the downside. It seems like there was very little interest below 27.11, and it just came back and it just basically traded the heck out of the lower range, holding steady. The point of control right there at 27.13 1/4. Okay, volume on Friday, listed right here. 798, relatively low versus what we would expect on a common ES day. Just overall a non-event, almost synonymous with summer trading. Last night, not sure if you're in to see this, but we spike up to 27.36 1/4. That's the high of the day. This looked to me like it was a quick stop run flash kind of thing. It was a spike. Just did a quick lift. They were very computerized, almost stop like squeeze. You can see it in the delta down here. Quite a bit of volume going off to the buy side. And then it comes right back to the open and goes sideways. Pisses a lot of people off. So it just opens, spiked up, executed a bunch of stops on the open, and then held sideways. Look at that range in the overnight. Very, very poor. Other than the spike, really what we traded in the overnight was 27.32-ish, 27.32 to about 27.24. High kurtosis on this profile, very, very sharp, where the volume is holding, very, very sharp area at about the center of it's about 27.29, with a point of control a little bit lower. Just very, very odd, very, very odd behavior. A lot of positioning. It looks to me like it's a macro. We're in a macro-based positioning environment or regime, with the yields pushing up above 3%. This was much anticipated by the market that this would cause the next turn down. We've seen a lot of delta on the sell side. You can see that this is Friday's range. Look at that. It's horrible. And you can see that delta again was just consistently negative as the market sits sideways. And if we scroll back, market opens, drops, and the delta is just finishes negative. You know, it's just we finished negative a lot on delta, and it just seems like that the participants in this market, some of the bigger participants are positioning to the short side, is what it appears to me. But with yields having pushed to, I think, 3.10 or so on the 10-year, the market's holding prices steady, and it may be making some people nervous. So that's where we are in the overnight. I want to show you this quick run. One of the things I like to do as I review the week is to go back and just run the auction bar by bar. I really suggest that you do that. Here's Monday. Monday opens in a gap, tests up to 27.41 and a quarter, stock zone there. It's a pre-existing stock zone from the prior week, and puts in a drop, retest from below, and hold at the lower distribution imbalance with Friday's range. Okay, so stock zone at 27.3250, very, very important area. Tuesday, gap down with an initiative move, meaning moving away from the most recent value, initiating away. And so we gap down and go, and we go down to 27.03 basically, the last Thursday's low, and we find buyers there and hold steady for balance. Okay, there it is. So we expect at some point for that to break. We start to fill in the gap zone left behind from the Thursday the 10th. Didn't quite close it. Gap zone low is 2700. We stopped at 2700.5. So the gap zone remains. Okay. And then Wednesday, we open higher. We test into 2750, and we hold steady right in between in the new gap zone created on Tuesday. Okay, so now we've got a base underneath us. This is Tuesday tested to 2700.5, and we have a base underneath us based on Wednesday's action. So this is when the scenarios become bullish. Okay, so we open on Thursday, and we open in the middle of this low volume node at 2720. And we have a key area down at 2712. There's a test of 2712, 2711. We have a double bottom at 2711, 2 days. 2 days with the same bottom after the base day, which was Tuesday. Wednesday's the rally day. Thursday's the test up above the rally day. Couldn't find buyers. Tested right up to this low volume node, just behind what we would as we would expect. Stock zone there at 3250, pushes right in, comes up short by a tick of the stock zone center, rolls over and puts in a 2711, and it finishes in the middle of the range. Okay, so now we have 2 days that are in balance with each other, which means that the next day is either going to break one way or the other, or it's going to provide further balance. In either case, 2711 is expected to break because it's a week low. That's what we just reviewed. And we have a completely balanced day. So we have 3 days of coiling, right? 3 days of coiling, and then we have a gap up. This is the kind of day. Now, the point being of running this exercise with you here, and I'll finish in a minute. The point being that it's you're trading off of the narrative. Okay. By the way, this, if you're confused by the bars here, this is a point figure chart presented in a candlestick, 0.25, which is a tick in the S&P by 10. But it gives a very clear story. A lot of activity. You see how many bars went into Tuesday? A lot of bars. Okay, a lot of back and forth, back and forth. This is quite the battle here. We had 1.27 million contracts, 1.27 million contracts for the RTH session on Tuesday. Wednesday, we come in with a push out of the range, and we continue to we fill in the gap that we left behind Tuesday. So we took that back on lighter volume, and then we move on to Thursday. And we test above, test the low, hold sideways. So this is primed for some sort of a move. We were only able to get 2711 poked through to 2708, 75 or so. I don't remember what the low is. Let's look at that. Yeah, 2708.75. And we held sideways. So all it did after all that effort is push through by about, what, 5, 7 ticks, whatever it is. I don't remember. Can't do meth. So it just could not get participation to the downside. We tested the upside. We found sellers. Then we took this double bottom, couldn't get participation to the downside, and then pop, we go. And so today, the reason I tell you this is it's important to understand the narrative of the story. It's important to understand where we came from, what we're trying to do, how good of a job, what have we accomplished, and understand the story that's unfolding before our very eyes. And so understanding the story helps place the scenarios in the order that they're most likely to play out in, and it helps us define what things we probably should or should not do or should emphasize during the session. And I use the word should lightly here. So this morning, what are we expecting now that we've tested up, double bottom, consolidated, tested the low, couldn't find any interest on the low side, we gap up. What's the expectation? The expectation is overnight inventory's long, okay? The expectation is it's likely to turn lower. I expect it to consolidate here at 27.24 or so around the overnight low. I expect an impulse to 27.3250 as we squeeze more and then consolidate and then start to drift upwards. My bias is up on the primary scenario. Okay, so I'm proven wrong if we don't get an impulse or if the impulse fails through the open. Then I know that it just doesn't have the power to push through, and we're likely to just go sideways. I expect the gap zone to remain open, okay? And I expect that we would push into or through this 3250 area. So I'm keeping a very close eye on that stock zone there. So that's the primary scenario. Okay? Sorry. Secondary scenario, open, push up, poke the 3250, impulse down, consolidate at the overnight low, and then hold sideways. This would give us a small distribution and then a larger distribution later in the session. That's scenario 2. This is a scenario where we try this high again, we push through the high, and then we fall right back through and hold steady. And so what we'll have is basically a 2 week or so major balance area, at which point we figure out where the point of control of this area is, and that becomes the magnet in this area until we break out. So those are the two main scenarios. That's all I have for you. I want to invite you, if you want to continue the conversation and keep the flow of this narrative and what the market's doing, I invite you to join convergenttrading.com, where I'm discussing the markets throughout the morning and the afternoon, and just talking trading all the time, just like a prop shop type of environment. So that's all I have for you for today. Good luck today. Mind your risk. Be patient. It's Monday. It's likely to be slow. Good luck.